Hello everyone, I am Vimla from Cloud Banking. Welcome one and all present here and those who are watching this webinar on LinkedIn Live. Today we are going to talk about an interesting topic, co-branded credit cards in the digital age. So before we get into the main topic, let me give a short introduction about Cloud Banking and what are all the products we offer. Cloud Banking is an end-to-end digital lending stack that helps banks, NBFCs, fintechs, and other financial institutions to manage the entire loan lifecycle, starting from loan origination to loan management. Our platform also supports over 10 plus loan products, including secured and unsecured loans. With the support of our platform, any financial institutions can disperse the loan in just 10 minutes. And in the G2 platform, we have been continuously named as a high performer and recognized as the number one easiest software to use in the digital lending category. Now let's move on to the today's topic, and I'm very happy to introduce Mr. Ramanathan as our guest speaker. He is the co-founder and CEO of Hyperface, Asia's first credit cards as a service platform focusing on transactional credit. With a strong belief in modern technology, he was the co-founder and CTO of JustPay, a 450 million USD payments company funded by SoftBank. And this webinar is going to be moderated by Mr. Mani Parthasarathi, one of the co-founder of Cloud Banking. Without any further delay, we can kick off the session. And Mani, over to you.
Yeah, thanks, Vimla. Thanks for the introduction. Thank you so much, Ram, for being here. Really appreciate you in the midst of your busy schedule. Thank you so much for allotting an hour's time to us. Welcome, Ram.
Absolutely, a pleasure to be here. It's always good to be talking about credit cards. It's one of my favorite.
Okay, cool. So actually, so we have just to announce few housekeeping points to the audience, right? So you can see the chat option in the top corner where you can also post all your questions here. We have a special Q&A session at the end of the discussion. Maybe all these questions, we'll try to answer most of your questions. Let's see. And I have a bunch of questions in my hand. Let's go with one by one, Ram. Okay. So yeah, we are hearing this co-branding. I mean, I'll come to the co-branding side. So I'd like to understand how big the credit card industry, Ram, according to you.
Right. Look, today, if you see, we have very close to about 100 million credit cards. We still haven't crossed that mark, but that is the number of cards in force. And every month now we are routinely clocking more than 2 lakh crores in spends, right? Which is pretty substantial. This is the commerce spends that is happening, right? And it is very much comparable to, in fact, the UPI ecosystem. If you see, which is the P2M part of that transaction volume, right? If you see that, and along with that, credit cards, the volume has actually picked up tremendously since the pandemic, right? In credit cards, both in terms of the number of cards and in terms of the total transaction volume that is happening, value that is happening on a monthly basis, we are seeing a steady growth there. And the even before the pandemic, the CAGR, the compounded annual growth rate of credit cards has been about 25%, right? 20 to 25%, right? And the industry continues to gallop there. But obviously, what is much more interesting is the future of it, right? This is these numbers are pretty sizable when you look at it from just the numbers point of view, but relative to the potential of a country like India, it still falls short. When you look at the US having more than 600 million credit cards, look at a country like China having, let's say, close to 1 billion credit cards, right? So those are all different, altogether numbers in a different stratosphere, right? But nevertheless, I think India is also growing significantly, and we are absolutely optimistic about the future.
Super. I think wonderful answer, Ram. I think there is a lot of scope to have in this space. So, I mean, coming to this current topic, right? people used to ask me what is co-branded credit cards, right? Everybody is giving different answers from the market standpoint. So I would like to hear it from a expert point of view. So this terminology is hearing nowadays like a buzzword in the industry, right? So what exactly mean by co-branded credit cards? Who are all the stakeholders, right? If you can explain, that would be a great.
Yeah, see the history of it. It traces back to, in fact, the place where credit cards were born, right? If you look at today in the US, this is a country where credit cards grew significantly. Store cards are very much in uh, in vogue there, right? Every large chain departmental store would give their own credit cards or closed loop cards, right? So essentially, the credit cards have always been a vehicle to deliver rewards pertaining to either, let's say, a particular store or a particular, let's say, a behavior, right? For instance, you look at an airline card, or you look at a shopping department shopping, or a e-commerce shopping card, right? These are all vehicles where the loyalty program of these commerce companies can be offered through credit card. A payment instrument is what essentially is used to recognize a returning customer, right? Imagine money going to, say, a shop, and you purchase your stuff, and then you make the payment, right? And at this point in time, look at the world pre-mobile phones, right? Where what is the way to detect if money is the one that is returning to the shop and they're purchasing it again, purchasing at the same shop again, right? So there is a history to this, and then the behavior sticks, right? Once you have given this kind of a behavior to the customer, that look, for your repeat purchase, for your loyalty, we are going to reward you with something that is going to make you happy, uh, make you feel happy about it, right? That's one thing. Another thing is, look, credit card is a very interesting way also for people to form an identity with a tribe or with a cult. To give you an example, take someone like a Chennai Super Kings, right? Now imagine there is a credit card which actually holds the brand of Chennai Super Kings and rewards you in the form of T-shirts and whatnot, right? Or tickets to CSK matches, right? So the delivery mechanism is the credit card, but credit card, a co-branded credit card, is an association for the customer with that particular brand, which just goes beyond just the financial instrument into your behavior outside of the finance ecosystem, right? That's why it's a very fascinating uh, product, right? Which makes a ton of sense for the commerce ecosystem and the financial ecosystem as well, right? And through this, right? If you again, going to the US example, I will keep going back to the US example because it's the most mature market. 45% of credit cards issued in the US market is co-branded credit cards. Today in India, if you see, we are at about 15%, and it is growing for co-branded credit cards. And in India, 1 in 3 credit cards that are issued today are co-branded credit cards, the new issuance, right? And a value-conscious consumer in India, we are very strong believers that they would choose co-branded credit card more than the bank's own organic credit card products.
Okay, interesting analogy. Actually, Ram, this raises your answers quickly. I'm getting a couple of questions in this answer what you're told. So, if I see around my space, I can see a lot of brands, right? So, as a consumer, how can I choose which brand I should go ahead with taking that card, right? I have a lot of brands. I have, if you take if you take my wallet, I have just 4 or 5 options I have, right? So how many cards I can buy?
See, this is where free market comes into picture, right? Where whichever brand is speaking better to you, and whichever reward program is you are feeling happy about, ultimately the
Mhm.
customer decides, right? In the market, there might be 10 different cards, all providing the same kind of benefits. But the customer
Mm.
eventually chooses which one is going to win. The same way commerce company, right? Today there are, let's say, 20 different grocery shops around your house.
Correct.
But
Correct.
there's a reason why you frequently visit one particular shop, right? So but just because of that, it's not as if, let's say, the rest of the grocery shops are shutting down or anything, right? The customer
Correct. Correct.
choice makes it an even more vibrant and a very exciting ecosystem, right? So,
Mm.
many cards will continue to exist, but some cards may really scale up, whereas some cards may not scale up as much, right?
Okay.
That is the nature of the that is a natural order, I would say.
All right. All right. And coming back on the stakeholders, right? If you can tell us what are the different stakeholders and how they are getting benefited out of it. Say, for example, if I got a say personalized card, right, co-branded card, and if I do a transaction, who are all is getting benefited and how are they getting benefited, right? If you can explain, yeah.
Right, right. Absolutely. Look, in fact, if you look at a co-branded credit card there, right? Number one, obviously the beneficiary is the bank. The bank which has actually put the instrument into the hands of the customer, they are
One second.
definitely.
Sorry to interrupt. If you can tell it as an example, right, that will be of help. Like if you can take any example like Amazon credit card or whatever, right? You can take that as an example and then explain. Yeah.
Sure, absolutely. Yeah, we can take Amazon ICICI Bank credit card itself. See, credit
Right.
card is fundamentally a profitable product for the bank. So the moment a customer spends beyond a certain number, right, the bank starts making money after all their fixed costs are recovered and accounted for, right? Now, now look at how an Amazon benefits, right? We can say that look, for Amazon, it doesn't make any difference whether the customer is using this card or that card, right? There is always a monetary incentive that the issuing bank shares to a co-brand partner. But this goes beyond that. Look, in commerce, the biggest cost for them is acquiring the customer back. Suppose you are an Amazon user, right? And at some point, let's say you churn out of Amazon. For Amazon to reacquire you, they have to spend a lot of money, as much as the CAC that they had spent to win you over the first time, right? And but when they put this credit card in your hand, the behavior becomes almost like, let's say, where if a normal customer stays with them for, let's say, 2 years, a customer with that has a credit card stays with them for 3 years or even more, right? Even longer. So thereby, their biggest benefit that they accrue is that of not losing the customer, right? And to that extent, some programs might even actually where the commerce company puts money on the table. We ourselves have seen where the margins are healthy for the business, right? For instance, a jewelry shop or a lifestyle or a cosmetics company, right? There the margins tend to be about 30 to 70%. So they are willing to even put additional discounts or cashbacks on the table for the customer if the customer uses their co-branded credit card, right? So there is the monetary incentive for the issuing bank, and the commerce for the commerce company, it is much more about not losing the customer, keeping their customers happy and increasing their NPS. Now, co-branded credit cards are also issued by fintech companies, right? So in that case, what it becomes is, in fact, if you see those particular credit cards, right, they look at, it's almost like a very user friendly, and they do not offer very attractive cashbacks. It's about user friendly, great support and things like that, right? For them, it's a plus one product. For instance, let's say take a super app like a Paytm, for example, right? Now Paytm will issue a co-branded credit card with a Citibank or an HDFC bank, right? And there the benefit for them is that it is a plus one product that they are able to sell to the customer, and they make money on a per transaction basis, right? So the incentive is very clear, it is money. But in commerce world, it is much more, it is much more to do with loyalty and not losing that customer,
Okay.
right?
Okay.
And what is the benefit for the customer? If you see, obviously the increased discounts and better cashbacks and better discounts that they get while shopping at their favorite destination. Case in point being Amazon. If you are a regular customer using a normal credit card, you might get 1 or 2% cashback from Amazon. But if you are a Prime customer using ICICI Amazon card, then you get 5% cashback. right? So for the customer, it's always about the rewards.
Okay, okay. And so I assume that just to set the context to the audience, I have been a regular user of an Amazon. Okay, I am using a normal credit card rather than the Amazon IC credit card. Okay, I'm using some other credit cards. So I did a transaction last year for 1 lakh. So from a different credit card, I may be getting some um, say 1 or 2% of the discounts. Where if I go with the co-branded credit cards of Amazon, I'll be able to get a 5% of the discount. That is my incentive to use that co-branded card.
Right.
But tell me one thing. So if I do a 1 lakh of transaction using that card, right? Just a random example I'm taking it out. How much Amazon, of course, the CAC is getting reduced because the customer stickiness is there. Uh, how the is there any other revenue that Amazon is getting or from the bank because they are the one who's give this customer to them, right? Can you give that example?
Right. So look, usually the revenue model is there is a one-time payout that the bank makes to the co-brand partner. And then on an
Oh,
ongoing basis also, there is a spend-based payout which is paid to the co-brand partner, right?
okay,
This is for the work that they are doing by way of acquiring customers and bringing customers to the table. But majority of the profit pool is essentially given as either cashback or reward points back to the customer. Like this is the fundamental truth in the credit card portfolio, because like I said, ultimately the card should appeal to the customer in some way or the other. And the value conscious customer will always appreciate a cashback, right? But a status customer might actually, a customer that looks for a better status and things like that, they might look for something else, right? Like for instance, a metal card, right? That could actually appeal more to them rather than, let's say, a cashback, right? So to each his or her own, right? Different programs are structured differently, but a vast majority of this rewards and cashback programs are shared by the bank from their profit pools, because that's where everything accumulates, and from there they distribute a significant part of it as rewards back to the customer, and the small part of it goes to the co-brand partner for acquiring and servicing the customer.
okay, okay, okay. Okay. Can you repeat that last point? Say, for example, Param, I'm getting say 5% of the cashback. It could be a reward points or it could be a cashback, whatever, right? That 5% of the amount is being shared by the that is the Amazon or from the bank. Who's giving that 5%?
So in most of the cases, this is completely covered for by the bank. But in some
Bank.
cases, the contribution is, yeah, there's also a contribution coming from the merchant, from the co-brand partner as well.
Okay, okay, interesting. So now let's switch the gears to technology, right? So what Hyperface is doing, how technology is helping this co-branded credit cards. If you can just give a background, Ram.
See, okay, now look, co-branded credit cards and credit cards have always been in this world for many years, right? Like it's a credit card itself is more than 2 decades old in India, and they've always existed in the physical form. Today what's happening is that the biggest change that's happening is that most of the customers are actually accessing this ecosystem via digital applications. See, our own shopping behavior is shifting from offline to online, right? And in online the delivery mechanism becomes extremely efficient, meaning putting a banner in a website or inside of a mobile app is very cost effective, right? And e-commerce companies and other apps like Paytm and others, right? They have figured out the art of putting the right nudges for targeting the right customers as well, right? So that they are able to drive better conversions, right? So in the present world, everything has gotten digitized, right? The customer is applying for the card from within the website of the commerce company or through their mobile app, and predominantly we are seeing that this is happening through mobile app, right? And then the card is delivered digitally first to the customer, because suppose you are on an app like Amazon or Zepto and you apply for the card, you can get the card instantly, right? Your digital KYC is also happening digitally. And once the card is approved, the card can instantly be used on Zepto or on Amazon to make a purchase within 5 minutes, right? And a lot of purchases have also shifted to online, right? So, so there's a lot of concentration that is now available in the online world, and from there, customers are able to um, the access the credit card ecosystem, right? So if you look at today, in fact, if you look at the current scenario, Amazon and Flipkart are the largest among the number one and number two co-branded credit card programs in India, beating all
Mm-hmm.
the offline co-brands, right? And this has mainly happened because of the digital presence. But digital also carries a lot of risk because the integration is very tight. This is where a company like Hyperface comes, because the commerce ecosystem operates on a different infosec plan, information security plane, when compared to the banking ecosystem. So the banks operate on the basis of trust, and that reflects in their investment that they are making on infosec, right? And the infosec burden gets imposed on the e-commerce company. What we do is that we actually create better APIs, and we create SDK that can then be integrated into a commerce app. And so for, say, an app, if they do it on their own, they would probably take a year to build a great experience. But if they do it with Hyperface, they can actually go live within 2 to 3 months, right? And eventually, the experience has to be as great as, say, an Apple credit card, or in the Indian context, it should be as simple as, let's say, signing up for UPI on an app like Google Pay or a Phone Pay, and then being able to transact, right? How easy that is, right? We have to make it that easy, that convenient, that fantastic user experience, right? That is where that is what Hyperface brings to the table. And fundamentally, what we are is a set of very user-friendly AP, developer-friendly APIs and SDKs that tackle a variety of scenarios for managing the card.
Perfect. I think thank you so much for explaining this, Ram. So, and another interesting question came to me is see, when a bank wants to roll out a co-branded credit card, right? Say, assume that they have identified a brand. Okay, what are the things that they'll have to jointly work together to a bank and then launch a co-branded credit card? What are the nuances to it? How do this engagement actually happens in the real world?
Absolutely. So there's a lot of matchmaking that we do. First of all, the bank should be having an appetite for that kind of a customer. To give you an example, let's say if I'm a bank and I'm already working with an airline for a co-branded credit card, then for me, other airlines and other OTA companies may not be of interest. Same is true with e-commerce as well. If I'm already working with one e-commerce company, then other e-commerce companies are not of use, right? So a bank very strategically approaches the kind of company that they want to partner with, right? And in one case, I remember there was a bank which did not have very strong presence in North, right? And so they went and tied up with a movie chain which had significant presence in the North with a very high brand value, right? And then they deliberately went and participated in a co-brand program with them, right? So it's a very strategic initiative for them, right? Just to increase their density of customers in that region, right? So a bank takes these measures depending on the stage that they are in, the growth that they want to see, and the diversification that they want. Now, given these criteria, then we actually figure out which company could be better suited for them, right? And then we do this kind of a matchmaking exercise as well. And but there are a lot of other questions as well, right? The ability of the business to have returning customers, viability of a loyalty program itself, right? And what is the wallet share? Is it meaningful enough, right? And what is the brand expression, right? How does the customer perceive that brand, right? A lot of this exercise goes into choosing whether a business is sound enough to issue a co-branded credit card, because ultimately if you launch the program and if you're not even able to do 100,000 cards, then it's a failure, right? It has to scale really well. The program has to scale really well. And like I said, the banks go after this very strategically, and the brands obviously will have to have that kind of a loyal following with their customers to be able to successfully launch a program.
So this is on the bank's perspective, right? How a bank choose a brand, right? So now let's talk from the brand perspective. Assume that I'm a brand, right? So how should I approach a bank? How should I make maximize my revenue from this particular engagement, right? How can I give most of the credits to my borrowers? I'm sorry, the customers, right? So how a brand should choose a bank, Ram?
Absolutely. Look, that's one of the reasons why we are there in the industry as well. Today, pre-Hyperface, what used to happen is that the brands would have to knock on the doors of each of these banks, and then they would have to negotiate their way around, right? And even think of themselves what could be a successful program as well. So across all these dimensions, we actually help them. For instance, uh, does it make sense for you to give 5% cashback or 6% cashback? Right? And the PNL may not even allow for the bank to go up to 6%. But here's the thing, right? If you are not offering 6%, then maybe the program itself may not be successful, right? So then brand has to put in that 1% extra, right? So these kind of research and this kind of understanding, right, benchmarking, right, all of that we do. We help the brands in terms of educating them as to how to go about issuing a card and the successful creation of a program, what to negotiate with the banks as well.
Okay. So here we have a quick poll time, Ram. Rajat, you there? We have two polls to get connected. Participants, you can just um, answer this poll. You'll have a question. It will be available for the next 10 seconds. I mean, 10 to 30 seconds. You can just um, answer the polls. So are we ready with the poll, Rajat? Yeah, please contact. Yeah. Just to make sure audience are sleeping or something. Okay. So we need their engagement, right? So right. So there is a poll in the chat option. So have you ever used co-branded credit card? If yes, what influenced you? What influenced your decision to choose it? It could be a brand affiliation, or only because of the rewards and benefits, or it is a recommendation from others, or because of the interest rates. Why did you choose a co-branded credit card? All right. So that's the first poll. The second poll what we are conducting right now is um, so people, I mean, the next question to Ram would be like that. So the rewards and benefits are easily understandable for you, is it? Or is it it's very crystal clear for you, or it's sounds like a chaos, or the offer's not clear to me. Uh, so you can just answer these two questions.
Yeah. Look, it's always uh, it's the answer is not so straightforward. We've seen examples of very simple credit card reward programs, such as the Amazon ICICI, right? It's absolutely simple, right? Uh, and we've seen some very tricky ones as well, right? Most of the, in fact, if you see the high-end credit cards, they tend to be the ones that are very tricky in nature, particularly the ones that come with reward points, right? Very hard to understand, very hard for the user to conceptualize, right? To visualize what is it that they are getting, right? It's also gamified a lot, By that, what I mean is that the bank may say, look, on this particular day, let's say, Saturday morning, 9 to 12, if you use my credit card, I will give you 2x reward points, right? Because now the thing is, they know that 9 to 12 spends are not so high, but you also want to encourage the customers to spend at that time and then make them
Okay.
better customers of your portfolio, right? So it's a performance marketing that the bank would run, particularly with reward points. With cashback, there is no room for such gamification elements, right? Because it's very fixed. And if you globally, if you see, right, a credit card like Apple has actually used cashback as the mechanism because it's crystal clear what the user is going to get. Apple credit card. And the same thing is what an Amazon has also done. So most of the mass market credit cards are extremely simple because they have to cater to a wide set of audience. And the least common denominator there is the cashback. Whereas a more sophisticated, slightly more sophisticated implementation will be in kind, and more sophisticated ones will be in reward points. So for the other one that I was talking about, you look at a PVR Kotak credit card, right? There the incentive is you spend 10,000 rupees and then you get one ticket free, PVR ticket free, right? Spend 15,000 and then you get two tickets free, right? So there's a spend threshold that you have to meet in order to be able to receive an incentive in kind. And reward points. Most of the American Express credit cards, if you see, they use reward points. HDFC, Infinia, they use reward points, right? And Vistara credit cards, they use reward points, right? So you can see these tend to be on the more sophisticated side, right? So obviously for the customer, it also becomes an engaging thing. More gamification. A lot of customers actually love gamification, right? There are a lot of forums that you can go to where people discuss these gamification windows, right? When they open up, right, and you can see a lot of people discussing how to maximize their points.
Yeah. but but tell me one thing. See, this points, right? See, for example, if you take me as an example, I used to travel a lot. Okay, most of my spends are in the travel pattern. Okay, so I'll usually get a travel credit card somewhere and make my trip cards, right? So whatever. Uh, so the question here is, why don't banks can analyze their spend patterns, our spend patterns, and then suggest a card to us? No, is there anything that is happening on this real world, Ram?
Oh, there are efforts being made. Even in fact, the largest issuer in the country has actually attempted something. We are also doing something with one of the co-brands where we are showcasing, depending on your spend, what is the incentive that you would get. Right? We've built another implementation with one of our partner banks, AU Small Finance Bank, where a customer can at any point in time can see what is the rupee value that they earned by way of discounts and cashbacks from their card. Right. So then it becomes a very easy thing to visualize. Okay, I have spent 1 lakh rupees and total cashbacks and discounts put together for me is about 3,000 rupees. Right. So that's a effective cashback of 3%. Right. So it kind of like makes it easy for the customer in some ways. But is there an outright way of looking at your past expenses and then suggesting the best credit card that is out there? It's a complex problem to solve for, right? It's
Okay.
not so straightforward, and we don't see any implementation out there. Perhaps it's a startup idea, right? For some startups to actually come out with such idea and then tackle this as a problem.
Okay. And then you will invest, is it? Super. All right. So switch gears, Ram. So now people are all talking about machine learning, artificial intelligence, Gen AI, and all, right? So where actually these technologies are helping this particular space, this co-branded credit cards, right? So what's your view on that?
See, I think the one of the biggest cost items to the banks is the cost of servicing. Okay. I believe that the immediate benefit for the bank will accrue by employing artificial intelligence in servicing, which is very straightforward. But it's just that the processes around it are or making it very cumbersome, right? And if we can, perhaps that will be an easy place to break into, right? The banks are still not. The other thing is about collections, right? Collections is another place where a lot of times consumers tend to forget, right? And it's not as if the banks are interested in making customers defaulters, right? They know that loyal set of customers don't like to see late fees and things like that on their statement, right? So even there, simple Gen AI could actually help, right? Where say the system automatically recognizes that you are closer to the date of due date, and then it sends you a very nice personalized crafted message, right? To you, reminding you about the payment, right? So this is another place where we also see machine learning also could help is, see, a lot of times credit cards is used as a vehicle to give offers to customers, and it is also a very nice way to get new customers. Because if you're a brand and if you have opened a new shop, right, you may want to actually look at all the customers in Chennai and then say that, look, and this could be an offer on the credit card, right? And you yourself can actually say that, look, use this credit card and get 10% cash back. Right. So discovery also can happen through credit cards, particularly because today we have the digital mechanism means, right? And obviously a credit card customer is a very lucrative customer for any shop to be to make a customer out of, right? So it becomes a very intelligent delivery mechanism. However, it is also very important that the targeting is done rightly. See, if a customer is shown thousands and thousands of offers, it's useless, right? You've got to show the most relevant offer to the customer. Today, for instance, I'll give you one example. Uh, it's very difficult to even know whether a customer is vegetarian or non-vegetarian. So if you are a vegetarian customer, the bank may actually show you a KFC advertisement, right? And you may not even be interested in that, and vice versa. You may be a chicken lover, and the bank may show you a vegan offer, right? Uh, that is the level of intelligence that prevails today, right? And I think there's a lot of value that can be unlocked by applying machine learning and artificial intelligence.
Super. I think this is going to be the next post in my LinkedIn. Cool. Thanks, Ram, for that. And so now we have, as you in the initial questions, you were answering the stakeholders of this co-branded, right? So one is the brand, and the next is the bank, right? So there are these two are two different animals altogether, right? How these two systems reconcile? How these two systems talk to each other, Ram? Can you give a brief on that?
Yeah, in fact, this is one of the most tricky things, right? Even when you look at data flowing from the banking system to the commerce system, that becomes a really big question, and the regulator doesn't want that to happen, right? They have put a very clear black and white terms that banking data cannot, particularly credit card data, cannot flow into commerce or fintech ecosystem, right? And having said that, you look at a very simple thing like bank giving cash back to prime versus non-prime customers of Amazon, right? For the prime customer, it must be 5%. For non-prime customer, it must be 3%. And somehow this information should hit the banking system, right? So which means data from the commerce ecosystem is flowing down into the banking system, right? Which becomes untenable when, let's say, a bank is having 50 different co-brand programs, and each commerce company having multiple tiers of customers, and customers moving from one tier to another tier, right? Becomes very, very tricky. Like you look at Vistara. Vistara has multiple tiers, and you take any Vistara card, actually has tier level programs, which are the variation in the reward points that are given to you, right? So again, this is another place where Hyperface actually bridges this gap and makes it far more real time, right? We don't wait for the entire statement or the entire month and then collect data from the commerce company. We give them APIs through which they can push down this data, we compute the cashback or the reward points that the customer is eligible for, and then we show it there. This is also an angle of hyper personalization, because it's based on the customer attribute that we are actually showing the cashback and the reward point. Right today, the way it is done today, it is very rudimentary. Batch processing, data moves from one system to another system. The way we are changing things is through API based mechanisms.
Okay, interesting. So it is doable. That's what you are saying, right? It's not it's real time, by the way, right?
Correct.
Okay,
Yeah.
interesting.
Yeah.
Okay. And how regulatory RBI is looking at this, right? So because we can see lot of things that has happened last year. The slice, we know what happened to slice and all, right? So a lot of questions are coming on that particular area. What RBI will say for this, right? So any thoughts on that, Ram?
See, you've got to understand where the regulator is coming from, right? They want to manage the risk in a much more predictable way, right? And any breach of trust in the ecosystem, right? It actually puts a dent in the overall trust of the system itself, right? And so there's a very protectionist mindset with which the regulator approaches this, right? And when you look at it from that point of view, then things actually become clear, right? For instance, the way we think about this is, how can we ensure that compliance is part of our thought process when we design product features itself, right? So we go out of our way to think about that, and then we put those guardrails in our system, right? And I believe that over a period of time, the regulator will be better understood. Today, they may come across as being adversaries, right? Like, why are they asking us to do this? It's extra work, right? And there have been several times where even I felt like that, right? But always, go back to the spirit of these things. Yes, there are few things that could feel as, oh, unnecessary, it's overburdening, right? But I think if we understand the spirit of these things, it's a very safe way to grow, ensuring growth, but also ensuring very stable growth without putting any dent in the ecosystem. And in fact, if you think about this money, we are the digital ecosystem, particularly after the prevalence of mobile phones, right, has grown multifold. But it has not even been a decade in India, right? When did smartphones, when did internet come? Right? And so there are many lessons for us to learn, right? And then become mature, right? we, in computer science, what they say, right? Premature optimization is the root of all evil, right? Thinking that, okay, we've reached an optimal state with regards to digital evolution in India, I think that is a very uh, shallow way of looking at it. I would say that, look, there is still a long way for us to go. There's still a lot of learning for us to actually come across, and so it's okay to build it in a way such that it is sustainable, right? So regulatory scrutiny is on the rise with every day, right? But we're also seeing that frauds are also on the rise. Digital frauds, be it account transaction frauds, social frauds, all of these are on the rise, right? And hence we need time in the ecosystem also to build defenses against these things, right? And you can see how the origination itself has evolved over a period of time, right? And we are seeing even frauds happening with such tight mechanisms put in place as well, right? So we will learn, let us learn. And I think the approach in the ecosystem should be that it's very important to pay heed to infosec and data privacy, and hence it's something which the regulator looks at data of the ecosystem, and hence it's better to defer to their judgment.
Okay. So I'm just give a quick pause here. I'm getting few questions on the chat. So let me take it up one by one. Audience, we have few more minutes. I have led with a couple of questions, but I'd like to take a few questions from the audience. So on the tier 2-3 cities, right, Ram? So how co-branded credit card is actually booming or it's not booming? Is it awareness is there? Just give a background on that, Ram.
In fact, a lot of growth is coming from tier 2 and tier 3 cities. We see that, in fact, the future growth will come significantly from there. Right? Of course, we are building mega cities as well, but outside of that, also a lot of interest is coming, mainly because see, look, India has traditionally lacked the infrastructure for POS machines, which are very expensive, right? So the merchant and shopkeepers, they just don't want the hassle of using POS devices, right? But what has changed is the online services have penetrated into tier 2 and tier 3 cities, right? Ordering from Amazon, Flipkart, or using Uber, Ola, using Swiggy, Zomato, using Zepto, Big Basket, right? This is all increased even in tier 2 and tier 3 cities, right? And so a lot of these customers can now use credit cards to purchase. Then the second thing is, now recently the regulator hitched the UPI train and the credit card wagon, right? So now you can link a RuPay credit card into your UPI app and use it at all places where UPI is accepted, right? So which means even for a 5 rupee transaction, you can use credit card to pay, which is phenomenal, right? Overnight, we have increased the acquiring touch points, the QR codes, right? That has enabled the acceptance for credit cards across the nook and corner of the country. That is a master stroke, right? So now you can use your credit card, link it to Google Pay. You may be in tier 4 village also, right? And then you can actually do a credit card transaction.
Actually, you touched a very important point. So how UPI is related to this industry, Ram? How before UPI, we all know we have been doing some different sort of net banking and all, right? After UPI,
Right.
how UPI is this helping this? There are a lot of buzzwords are happening on credit on top of UPI. Some banks have started using it, some banks are not. So how does actually is it actually live in the system? It's actually not.
It is.
What is?
It is. It is.
Oh, okay.
It is absolutely live. Even for our own partner banks, what we are seeing is that it is now climbing up to higher single digits in terms of the total transaction share happening via UPI. I'm not talking about RuPay cards. I'm talking about UPI, RuPay cards on UPI apps. Right, RuPay
Okay.
cards has a slightly higher market share. If you look at consolidated one, it would be close to 15%. But the UPI-based transactions have been increasingly climbing up. And I'm talking about the past 3 months data, when just the bank started doing it, right? So
Okay.
our belief is that this is going to supercharge the credit card acceptance and the spends for all kinds of users. Not sophisticated users also will use it. Your regular mass market customers also will start using it by linking their cards to their UPI apps.
I think if will that be I mean, where do you see this growth, Ram? I think that is one of the questions, right? So the trends and industry, I mean, industry trends and opportunities, right? Where and all these things will open up in the future, this co-branded cards, right? So that is actually one of the questions being asked by the audience.
Yeah, look, I'll give you a very small, quick story, right? In 2006, okay, we were looking at how to digitize business loans. Sorry, 2008, we were looking at how to digitize business loans, right? And the first big problem is reaching that business. Then the second big problem is analyzing that business, and then giving a loan to them, right? Now, you would have seen this even in your LOS system, right? How difficult it is to actually make a business loan, small proprietorship loan, right? But today, if you look at for the banks, right? A bank might be a regional bank in the North India. They could tie up with a company like a Khata Book, and they can go to a tier 3 town in Tamil Nadu, and they can, in Khata Book app, imagine they can put a banner saying, hey, we can give you a credit card based on the data that you have been sharing with Khata Book, right? And their GST records and their spend patterns, all of that is digitally available, and the vintage as well, right? Now, basis that, a bank which is headquartered in Jaipur or in Himachal or in Bengal can actually make a credit card digitally available, and they can send a physical card also to this small shop in Tamil Nadu, right? Through the delivery mechanism becomes an app like a Google Pay or a Phone Pay or a Khata book, right? So we are able to reach nook and cranny of the country because of the digital penetration, right? Credit card still, it's a credit product. It has to be made uh, only to customers or businesses that have a earning mechanism, right?
Right.
They have some source of, right? Other than that, you can this was the biggest problem, and this has been solved, right? We have shrunk the distance significantly, and delivery channels have become far more efficient, right? Cut to 2024, right? And this is why we believe that the next 1 decade we will be able to see the growth of credit cards in country zooming past 500 million, where it took us 20 years to come to 100 million. But we believe that within the next 6 years, right, we will actually hit 500 million, right? That's 400 million,
Wow.
4x growth from where we are today.
Great to hear that. I think this is one of the interesting news. Uh, Again, the fallback of this particular, I mean, for this particular growth rate, there is a question being asked. So people are afraid of hidden charges of the credit card, right? So one of the interesting poll conducted by Cred, right? So Cred is being used by one of the top notch for the top 3% of the population of India, right? So even then, even if they conducted the survey, people have answered that the interest rate of a credit card is less than 20%, right? But it was not the case. So people literally afraid of having cards. So is it safe from a customer point of view? What will be the interest rates that banks are giving for the co-branded cards?
Yeah, look, it's a very pertinent question, right? And any growth industry, this question needs to be asked and answered, right? Our belief is that information is like they say, sunlight is the best disinfectant, right? It's like that, right? Where today we are able to have information. Today, an app like Cred is able to tell you that, look, bank has charged you some fees which was not supposed to be there, right? And they give that advice free of cost, right? It's not even charged to the customer, right? So
Correct,
the
correct.
market forces like these will push the banks to actually make, fight for the customer, right? In a true scenario where the banks are fighting for the customers, these kind of behaviors are auto-correcting in nature, right? Which is why you need a very vibrant market ecosystem, right? A very vibrant market ecosystem, awareness for the customer through multiple sources of medium like Cred, for example, right? Will actually create that safety net automatically, right? And obviously, there's a very virtuous loop that will get built here. Now, once the customers start saying that, look, this bank is charging hidden fees, then another bank will go and offer the product to the customer, right? Thereby forcing the hand of the other bank to bring down the fees, right? Today we saw this with last year we saw this with IDFC Bank. The same question they asked, right? Why should we charge customers 36% APR or 40% APR for customers with a CIBIL score of greater than 750, right? So they lowered it, right? And obviously it's very new. Other banks will respond to it by creating their own innovation. Right. The same thing goes for the collection practices as well.
Sorry, say it again.
I'm saying the same thing goes for collection practices as well, right? Today, it's easy to figure out which banks are employing harsh techniques to collect versus which banks are not, right? That information uh, is becoming more and more available to the customer.
All right. And I'll just take this as since we are running out of time, I'll just take this one last question, Ram. Okay. Um, just scrolling. So we have keep hearing a lot about credit cards being used by Amazon or Flipkart, right? Um, you also touched upon Vistara, right? So who will all be the major players where banks have to go behind, or who will all be the next big thing? So if you can tell us, Ram, that will be great. Yeah.
Okay, I can't reveal the names to you, but
Yeah.
the affluent customer segment is very attractive. The Gen Z
Mm,
segment is very attractive for the
mm,
bank.
mm,
The obviously the salaried segment is extremely stable and very attractive to the banks, but we are also seeing that the merchant segment is becoming attractive as well. Our own partner banks are now
okay.
chasing several co-brands for the businesses that have very vibrant merchant ecosystem with them. Right? That's also
Mm.
becoming more important.
Cool. And lastly, we can end up by getting your suggestion or advice to the audience. How things going to be in co-branded credit cards? If somebody wants to get into this, what they have to do? Just an entrepreneurial advice, Ram.
Right, absolutely. Look, today there are banks warming up to the idea of working with fintech companies for co-branded credit cards, provided they bring something new to the table. Right? There are largely speaking, there are two categories of co-branded credit cards. One is primarily driven by commerce companies. Right. The second thing is the fintech companies, right? Like your One Card, Jupiter, Uni, Slice. These are all the fintech
Right.
companies, and these segments there are large players, but albeit that there are still players that focus on the pockets. For instance, we know of a co-branded credit card that focuses on working professionals like lawyers and doctors and other professionals, right? Now that as a segment can be lucrative for a certain bank partner, right? So it's very important to identify the target segment which is lucrative enough for the bank, that should be sizable, and they should have a source of income, and they should be able to spend, right? Then the second thing is the narrative around the card itself. Why is this person going to take your card? What is so special about it, right? So there has to be a very clear cut answer to that, right? And you are able to, provided you are able to get these two things, then depending on the stage, whether the company has raised seed round or series A round, depending on that, the banks are willing to play ball. Right, that pretty much is it, right? And like I said, banks are warming up to the idea of working with fintech companies that are early stage. They were saying no last year, but now they have started looking at these proposals much more closely, and I'm seeing a lot of willingness to roll out these kind of cards, right? Of course, the e-commerce is the most lucrative segment. They get the most red carpet welcome across the board from every bank, right? And it's
Super.
almost like a bidding process, like auction or a bidding process, like who wants to uh, uh, get MS Dhoni on their side, like the process for IPL selection, right? It's very similar to that, in fact.
Great answers. And thank you so much, Ram, for being patiently answers to my all questions. I think we've got a lot of questions not been answered. I think we will take it up offline. Okay. Um, and audience, we monthly we conduct a webinar on digital lending topics and different topics with respect to banking sectors. Please keep do follow us. And by the way, Ram, being an investor in our company, thank you so much for for sharing your thoughts on co-branded credit cards. I really appreciate that. Thank you so much, Ram.
Thank you very much. It was very enjoyable doing this webinar. All right, bye.
Bye. Thanks, audience.
Bye.
Yeah.